Hope everyone's doing well. Welcome back to another weekly outlook. So it's been a crazy week in the markets, to say the least, right? If we just quickly hover over sort of our daily candles quickly. So this was Monday, Tuesday, not much. Big move on the Wednesday, and an even bigger move on that Thursday, and then Friday trading back into the range. So, where does that leave us? So we know we've wanted this sort of market maker sell model for a little while on the DXY, right? Of course, this is in play. You guys know I've got a sort of larger target marked here. And of course, we can treat this sell side over here, target 2. Pretty, self-explanatory is the reason I didn't really go ahead and mark both of them. But since we're approaching them, might as well. Both targets there, yeah? So now, what we see here is in the sell side curve of the market maker sell model, essentially the distribution, we had something quite similar before. You get a bit of choppiness, bit of accumulation, massive move. They don't really give us a way to align, and now very similar here. Bit of accumulation, very choppy, and then a big move. Now, I'm anticipating price to carry on down. Thankfully, this time, I would say we're in a much better position. Right? If we go back to that daily one, so you guys see you had this big range, 1, 2, 3 down candles. And in this, we weren't offered much, especially on an intraday level. As a swing trader, they potentially might have caught something off of this break here. But on an intraday level, there wasn't much. And then when we finally got this retracement, you guys can see from where we hit into the daily fair value gap, 1, 2, 3, 4, 5 daily candles, all quite small, quite choppy. And then again, this delivery occurred without giving much of a chance to get in for anyone. Right? So why is it now not as bad for us? If we take this as the current range, we trade the range as such, and we assume that we are going to trade lower, we're already technically in the premium. As the new week opens, right, if we zoom out a couple of time frames now, I would assume we get some sort of sweep and potentially an early move. Now, one thing that does, concern me to an extent is how sort of big the wick is. We've hit that sort of, last order block candle and respect to the fair value up so far. But the reason that doesn't sort of hold the same significance to me is you have to consider which way the displacement was first. So on our daily time frame, I believe it's clearer than the others. It's clear that, it's an AMD, accumulation, manipulation, distribution, and that impulse move started down. This up move here, trading back into range, this inside daily candle, right, is essentially just a retracement in my eyes for the time being. Now, one thing to note is that in some scenarios, what we can actually get is a run on this high. You guys see how we have this big range, mark out the range as such. We don't really reach the premium. Now, this doesn't mean that we will reach the premium, but sometimes what price will do when we have these sort of discount highs or swings, we will sometimes come and sweep these into that sort of high time frame period rate, and then from there back down. Now, in this scenario particularly, that's not exactly what I'm looking for. I know it's a possibility, but it's not at the forefront of my, sort of expectations for price. Instead, like I said to you guys, what we're looking at is this sort of 4-hour daily range. From here, I would like to see price trigger in, basically another market maker sell model, but on the lower time frame. If the new week opens and we're running this high, right, running into this previous sort of swing here, we're essentially, hitting the premium. We're going to be sweeping the previous weekly high, previous daily high, and then from there, I would like to see that distribution downwards, ideally, right? That's the sort of scenario I'm after. Now, one thing here is we had a very good read on price, right? We had accumulation, manipulation, and we wanted distribution to these lows, that eventually got triggered in. And from where it got triggered in, right, you see where we had this first leg of price. This was a day that I would say was pretty sort of untradeable. Wasn't much we could do there. Guys, see, it got very choppy, and we were essentially waiting for another breakdown to confirm, okay, yeah, we're going to carry on down. Now we'll start shorting. But as you can see, these, that was essentially the start of that massive delivery, that one-way move that was sort of hard to catch. Now, what it is, right, I feel like the market is very sensitive to the tariff news at the moment. NFP as daily candle had a decent move up. NFP as a news event itself didn't really do anything crazy. And that's because I believe, one, price is essentially exhausted. We're having a very large one-way move, and there's a lot of volatility, and after there's been a huge amount of volatility, tend to get slow down in price, just logically. Now, with the tariff news, I'm messaging to the Mentorship, said to you guys, it's hard to know exactly when it'll come. Of course, there's times where Trump is scheduled to speak, or there's meetings and we know, we have expectation, but other times statements are made, things are said, and they're hard to account for. This makes for very volatile conditions. It makes for, conditions that can sort of whipsaw the market in either direction very quick, right? So it's important to just bear that in mind when you're in positions, when you're holding certain positions, and especially considering, where we are on the charts. Of course, we want the move down, but for example, right, let's just say, you're waiting for a premium. In this scenario, it looks like we're going to get the premium, or essentially we'll basically add the premium. But in a different scenario, you might be waiting for a premium, something comes out and price just stops. Because overall, the bias is bearish. So what I'm saying, in condition like this, is probably not favorable to be doing counter trend trading. Just in a general sense, perhaps to short-term targets, like if we open up on Monday, you're trading to previous weekly high or something like that. But for example, if we were down here and you were planning to trade up to this gap, it may not have been a wise decision at the time, right? But again, with these things, I feel that what it comes down to is a level of experience, because each scenario will differ slightly, and you'll need a level of intuition to know, is this somewhere I should participate, or is this somewhere I should mitigate risk or sit on my hands? And usually, if you're unsure, the best thing to do is just sit on your hands, right? So cool. We quickly take a look at Forex Factory before we continue. This week is not as busy, right, for the dollar. We have CPI on the Thursday, which is a little bit weird. It's usually on the Wednesday. And we have PPI on the Friday, and consumer sentiment, GDP for the pound, FOMC meeting minutes on the Wednesday, and not much on the Monday and Tuesday. We had a very expansionary move, so it's sort of difficult to say exactly when we expect the week to move off. What I would anticipate is that we get that. Earlier I said previous weekly high run, not a previous weekly high run, rather a previous daily high run into this premium of the range, and then we move down, sort of thing we're looking for. And from there, right, as you guys can see, prices already left these sort of reaccumulations, run a bit higher, get that nice AMD reversal, and start talking about lower pricing on the dollar, right? But as we step into the week, it is a little bit lackluster, so I would let it form, see what price is doing, and you might even just get accumulation, right? Very similar to before you get these impulse moves, you might get hopefully not as big of an accumulation, but an accumulation for the next couple of days until we approach FOMC meeting minutes, or we start approaching CPI, and then price tends to manipulate and distribute after engineering some liquidity, right? One was massive move down, very, very similar to DXY. When we zoom out, you just start seeing that textbook market maker sort of schematic, that high time frame liquidity run, displacement down, retracement, second leg retracement, now third leg finally. Very similar to the DXY in terms of the monthly candle formation, right? It's leaving a bit of a wick, not as big, not as sort of exaggerated. That's a weekly, very similar. Yeah, that nice candle that swept a few previous candles, and then of course the big move down. And from here, I would really only expect lower prices. Of course, we expect somewhat of a retracement here, especially price leaving this big daily wick, but I wouldn't expect anything crazy. From here, the likelihood is bond yields push lower, sell side targets that we are locked onto is here for now. If we can hit this out with a lot of energy, it's likely we will look to move towards this as well, right? One thing that I would say in a general sense everyone needs to bear in mind is, just because we've had these crazy big moves a couple of times, doesn't mean it's going to happen every time. Can it happen again? Yes, definitely. Especially with Trump in power right now and how things are going, it wouldn't surprise me if it happened again. The only thing is, when we do get in trades, just because there's been massive move happening, don't start becoming extremely ambitious and thinking, okay, yeah, I've got in a short here, I'm going to short all the way to down here, right? This move from there to there could be a matter of weeks, if not months, right? So always just something to bear in mind, especially if you're an intraday trader, you can just play the short-term levels. You'll probably even be offered the same trade more than once, meaning, you know, you might be trying to short towards, let's say you're shorting from here to this low. You short somewhere here, you realize today is probably not going to hit that, so let me just take profit like here. Next day opens, you get a retracement, you short again, you short towards this low. And this time it actually hits the low. That's what I mean by the same trade twice sometimes. You know, again, it comes down to context, but depending on price's proximity, depending on timing, as an intraday trader, sometimes you get opportunities to catch the same moves twice. As a swing trader, it will be slightly different, but you know, they have to play it their own way. And then, oh, there we go. What we drew that on looks pretty two-plan. As you guys can see, big move. I remember checking this midweek. I was like, wait, what? There's no way, because I'm just seeing like a plus 1%, 1 point something percent candle. I think that's in a, like, you know, single daily candle. The insane move here, big move here. As you guys can see when we come out that weekly, this is what we wanted. Not as strong, but this is what we wanted. You know, prices traded lower, then we had that move up, then we knew we'd retrace to this fair value gap, order block, and move up from here. Especially after this type of weekly close, it was obvious this is order block, next move should be up, and clearly it was, right? Big expansion. Now, Euro GBP has this tendency to consolidate, and I think this is essentially where we are right now. To me, I would class, so we'll leave this for a second. I would class this whole area here now as an accumulation. Now, I believe this big impulse move currently has broken us out of this consolidation, right? So the likelihood is that, you know, later on we probably will see lower pricing. This is liquidity being engineered. These are relatively equal lows here. If you mark it like this, not too far off. Prices these behind. So the thing is, from here, if this is the manipulation, of course, you know, this is a weekly chart. It may take some time to play out, but what we intend to see is that just normal schematic of accumulation, manipulated distribution. What we need to consider is the manipulation can be extended in this scenario, right? Price really wants to run higher, then you have to start considering what buyer side targets are sort of, you know, in line for us. And the sort of next obvious swing highs, you know, buy side target from here really and truly is that high. Even though it's a little bit far away, it's there, right? That would be the next logical target, in my opinion. You know, it's still relatively equal with this, land up with this consolidation, and you know, we just want to see what price will do from there. We quickly just take a look at the monthly time frame as well. Yeah, so sort of the last big wick. Now, another thing that would not surprise me by any means, and I'd like everyone to bear in mind, is where we are on Euro GBP right now, right above this accumulation. If price was to displace down very strongly, it would be a valid reversal. So although this is the buy side target in mind, if price wants to really push higher, the reversal can occur from here, which leaves us in a bit of a sticky spot, right? It's about playing to short-term targets. You know, as intraday traders, it's advantageous because we don't need to have, you know, our monthly candle bias has to be correct to, you know, catch the winning side. No, for us, once we are in the trade, it's coming down to that lower time frame, looking at the daily, the 4 hour, and usually that's a bit easier to read because it's a short term read. If price reverses from here, this is only the first week of April, we would probably leave in a big, you know, monthly candle wick. If we leave that, then that can easily set up the distribution this way, right? One more thing I just quickly wanted to touch on. See, not to me, so cool. I see on some previous targets that we had marked out. Cool. Yeah, what we want to see in this scenario here, right? Even though this is the AMD, accumulation, manipulation, distribution, we're actually looking for GU to press higher. Weekly fair value up here, I think we get a run into this, and then we want to see price run higher. Same way we want to see an early sweep with a proximity on the DXY, and then a, you know, opposing move. Very similar here on GU, right? Accumulation, manipulation, distribution here, and then a follow reversal all the way back up to the highs. We've got the initial consolidation there, and I think this is just sort of too textbook to not take place. right? If we take a look at Euro USD as well, considering we may still be long in Euro GBP, it doesn't shape up exactly the same, which guys may get confused, but this is why we use the DXY as the indicator and make things easy. Now, what this shows us is relative strength. This has the same accumulation that GBPUSD has. But what might happen here is we get, example of SMT, that EU may come down, but it may not sweep the accumulation. The odds that GU sweeps that are very high because of how close it is, but EU is not close, right? So if EU, comes a bit lower, moves higher, doesn't sweep it, and DXY is displacing down, and even GU is displacing up, then what it will show you is the likelihood is that EU may be the better long. Very similar to GU, it has that initial consolidation, very clear target to work towards, which is 1.12 roughly, but also consider this side, which is a bit higher into the range, getting towards 1.13. But for now, this is, the obvious target. Bear in mind. So, I know sometimes I get questions about that. Guys might be getting confused. Oh, which one do I pick? Or GU ran the sell side and displaced high, but EU didn't run the sell side and displaced. That's not necessarily a bad thing, as long as DXY is playing out how you expect it to play. It had the sweep, it had the displacement. All that's showing you is SMT between EU and GU for which one is stronger, which one is weaker. Okay. Bitcoin, nothing interesting, I'm afraid. Nothing at all. Just consolidated, expecting it to continue. Not much to say if I'm being honest, guys. Just told from the daily candles, weekly candles as well. Now, this is a chart that we need to talk about. Insane move. Trump's tariffs. Now, does this mean we're bearish? Is this the top? Is this the reversal? Is this the next sort of stock market crash? Everyone's scared. No. Don't worry, guys. You don't need to be, sort of afraid. The market is not done. This is not the end of the world. The thing is, right, when we trade, it comes back to that idea of and being sort of intraday traders, we work towards shorter and mid-term targets. And we know we had a lot of liquidity here and our prices come random. This is not a bad thing, right? The S&P, if we take it from about here, which is October 2022 to literally February 2025, which is what I think 2 and a bit years, be close to 2.5. That's a straight move up. In that time, actually, if we measure it out, right? If we measure to there, across the span of 861 days, price has had a 76%. That is crazy, right? It's got close to doubling. It's only right that you get some relief. Now, why am I so confident that it's left a massive consolidation? This is textbook, retracement. If this was, for example, a 15-minute, 1 hour time frame, whatever it is, you would expect, okay, yeah, we've had a very big move up, price is retracing into this, it will go higher eventually, take a bit of time. Where I think we are now, and we've swept some major liquidity levels. Why are they, particularly major, is because we've hit these sort of whole numbers. You've gone back into that 5,000. You're approaching the high, 4,000s. And these are what I would call, 1, institutional levels, and 2, sort of psychological levels. Now, the market's panicking. Usually similar to, of course, things like crypto and whatnot, they're all the same risk on assets. People are all now going to start capitulating and panicking. Is usually the best time to buy. So from here, I think we can go slightly lower. I would mark out this low, the S&P sell side that leads into the discount, right, on the higher time frame. But anywhere from here, I would say a reversal is imminent. Will it happen immediately? Definitely not. But I do think it's around the corner. I don't think it's as far as people would think. And I would definitely, right, especially if you do sweep this low, or once we've swept the low, start paying attention to the monthly closes. When we get one sort of, massive, solid monthly close, then you have that, good confirmation. Okay, yeah, we are heading higher, right? But yeah, guys, for now on here, just to quickly summarize, I would sit a bit flat. I do think we head lower, swept some sell side. I do think it may be time for a retracement before we head straight to that next target. to see what price offers you in this range. You can play the range from sort of these highs, this order block, the current low. I doubt you get that sort of premium retracement, right? I think it will be a shallow retracement to hit this, and then there's a higher likelihood of a reversal. Always remember, right? Price sort of sets itself up in the sense of, you know, if price traces here, pushes down, here's that sell side, pushes down. You see from here, if it then reverses, what has it done with these short-term highs? It's sort of using them for a market structure shift, right? So sometimes when, you know, price is approaching these levels and it's going to reverse and you're thinking, okay, I'm going to hit this level, but I'm going to wait for the premium, you might not get that premium, especially on a higher time frame. So something to just bear in mind. And just quickly summarize on the DXY. The sort of premise is that next week we see this previous daily high. We want to see a run into this zone, into this premium. From here, we want to hunt the displacement lower. And we were looking for early shorts on the DXY. We're not looking for price to, you know, start heading higher. We know it's a possibility, but it's not at the forefront. Regardless, until you get the displacement, you're going to sit on your hands. So even if price seems to be pushing for this high and it's becoming more and more obvious, we might be able to trade to that later. But that's not the sort of priority right now. The only other scenario to consider is that we have news late in the week, nothing at the start. We might get a bit of consolidation. Just bear that in mind and be patient. Always remember, displacement is your big signal for engagement, whether that's on a lower time frame and whether that's on a higher time frame for, you know, weekly, daily expansion, whatever it is. But yeah, guys, that is it for the weekly outlook. As usual, any questions at all, anything I can help with, just drop